Hi all. So today we are going to start about introduction to accounting. So welcome to RCC, and before that I would like to say you to subscribe my channel RCC and do hit the notification icon to get the latest updates. So without wasting any time, let's get started. Now starting with the accounting, students. So what is accounting? Accounting is a process of collecting, recording, classifying, summarizing and communicating financial informations to the users. That means when we are just collecting the data, then we are recording it in a systematic manner, then classifying it, that means what are required and what are not required, and last of all we are summarizing the whole information of accounting and we are communicating that financial information to the required users. Next is bookkeeping. What is bookkeeping? Bookkeeping is a process of recording financial transactions in a systematic manner and classifying them into ledgers. Now students, what are ledgers, what are journal, we will be coming to that in the next part. This is just the basic part. So bookkeeping is nothing but it is the recording of the financial transactions in a systematic manner. Next is what is accountancy. We have heard of the book accountancy, but we have never come to know about what is actually accountancy. Accountancy is the systematic knowledge of accounting. That means we are just educating the students, the users, what is actually accounts. That means how can we just maintain the books of accounts. Next is income statement. Actually income statement is related to trading and profit and loss account. Now what are trading and profit and loss, we will come to know into the next parts of our videos when we will be doing the further parts. It shows profit earned or loss incurred by the enterprise during the accounting year. Now in this part, income statement, it shows that if the company have done a profit or a loss, it will be shown in the income statement. Now is position statement, that is balance sheet. Now what is a balance sheet? Position statement or balance sheet shows the financial position of the enterprise at a particular date. That means where is the financial position of the enterprise, where is the enterprise lying, that will be shown by the balance sheet. That means what will be the assets, what will be the liabilities of the company. So we will come into the further videos, don't worry about that. Then will be double entry system of accounting. What is double entry system? Double entry system of accounting means a system of accounting whereby both debit and credit aspects of a transactions are recorded. That means in accounting there are two sides, one is debit side, another one is credit side. So we have to record the transactions in both the sides, that means in both the aspects. Suppose we are recording a transaction in a debit side, we also have to record it on a credit side of some books. Suppose I am giving you an example for that. Suppose any of the two buyers, one is a buyer, one is a seller. So when a seller is selling a good to the buyer, that means he will record a transaction in his book, as well as buyer will also be recording the transaction in his good. So the seller will be recording in debit and the buyer will be recording in a credit format. So you will understand this into the further parts. I will be coming to details. Just basic is double entry means we are recording it on both the debit and credit. Now is single entry system of accounting. Single entry system of accounting is a system under which both aspects of the transactions are not recorded in all the cases. In some cases both aspects are recorded, while in other either one aspect is recorded or a transaction is not recorded at all. This is known as incomplete double entry system. That means when we are recording it on one way, it is called as single entry system. That means when we are recording in just one side, not in both the sides, that is single entry system. Okay, I hope you have understood up to this much. Then coming to the next part. Now students, we are coming to the difference of bookkeeping and accounting. What is bookkeeping, you all know now, and what is accounting also, that also you all know, not in detail but basics you know. Now we are coming to the difference between bookkeeping and accounting. So what is the bookkeeping? Bookkeeping is nothing but identifying the financial transaction, measuring them in monetary terms or money terms, recording and classifying them. That means just we are recording the transaction. We are recording any transaction, we are classifying them. That means this will be this. That means suppose we are buying something from purchase, suppose supplier A, so we will write that we are buying from supplier A. Suppose we are selling it to customer B, so we will be writing that we are selling that product to customer B. Just like that way we are recording the transaction. That is bookkeeping. And what is accounting? Accounting means we are just in accounting, in addition to bookkeeping, is concerned with summarizing the recorded transactions, interpreting them and communicating the results. That means we are not only just writing it down on the books, we are then summarizing that what had happened, then we are interpreting the result. That means we have made profit or loss. That is what accounting means. And bookkeeping is a primary stage, accounting is a secondary stage. It begins where the bookkeeping just ends. Next is performance. Normally junior staffs perform the function. That means as it is a basic step in accountancy, so basically juniors perform all these functions. And accounting, especially senior staff, basically who are little experienced, they perform all these functions of accounting. Then is the job is clerical and routine in nature. That means you have to do it on a regular basis. The job is analytical and dynamic in nature. Accounting job is basically dynamic. That means it keeps varying. That means it keeps changing, and it is dynamic in nature. That means you have to just be dynamic in nature. Okay. Then is objective of bookkeeping is to maintain systematic records of financial transactions. That means you have to systematically record the transaction. You cannot do just you have record one transaction on one day and the second day you're not. You have to record it on a daily basis, and you have to record it on a systematic way. Okay. Next is objective of accounting is to ascertain net results of operations and financial positions and to communicate information to the interested parties. That means basically accounting deals with the net results. As I have already told you that it deals with profits and losses. Not only profits and losses, it deals with several other factors that we will come to know in our next videos. So basically it deals with profits and losses. Then it also deals with the financial position of the firm. That means where the firm is lying right now. Is it making profit in the market, or is it running in the loss? Okay. Then is bookkeeping is the basis of accounting, and accounting begins where bookkeeping ends. Already I have told that accounting is the bookkeeping is the basis of accounting. That means just the bookkeeping is the basic part of accounting. It has just arrived. Then comes accounting. Okay. Accounting starts where bookkeeping ends. Next is bookkeeping is mechanical in nature and thus does not require special skill. Just to write it down on a recorded manner, we does not need a special skill. So bookkeeping is basic, and accounting, it obviously needs special skills because you need to analyze the result and you need to interpret it. That means you need to understand that is it making profit or is it making loss. So that is all about difference between bookkeeping and accounting. Now we are coming to the accounting process, students. Now first a financial transaction or any event happens. That means any sale you can say or any purchase happens in a company. Then we will be recording that transactions. Where we will be recording, there are various books where we will be recording. First is we will make the journal. We will come what is journal. Then we will be recording it in a cash book or a purchase book, sales book, purchase return book, sales return book, bills payable book, bills receivable book, or journal proper. Whatever the transaction may be, according to the books we will be maintaining the transaction. That means we will be recording the transactions in any of these books. We will come in detail further. Then we will be classifying it as ledgers. That means we will be making different books of that so that we can classify the transaction, that is making ledger. Then after making ledger, we will be coming to the next part, that is summarizing of the transaction. how could we summarize the transaction? We can make trial balance, we can make profit and loss account, then we can make balance sheet. After making the balance sheet, we will understand that where is the position of the firm. That means, is the firm making any profit or is it running at loss? Okay, then we will analyze the interpretation. That means we will understand that is the firm making profit or losses, and then we will communicate it to the users. That means our seniors or anybody who is in the responsible position to interpret it. So I hope you have understood this part of the accounting, the basics of accounting. Now today up to this much, students, and thank you for seeing the video. And if you have understood the video, do subscribe my channel RCC, do give the like and do subscribe my channel. Okay, thank you and bye bye.